So, all right then. So the topic in hand that we have today is how crypto platforms are helping with local innovation. Well, who better to have on the panel than the pioneers of India's crypto and Web3 ecosystem with us? So absolutely great to have Sumit, Ashish, and Seker from Binance joining us for the panel. So, Sumit, let me begin with you. Um, Beyond just being a crypto platform, how are local players like, CoinDCX, CoinSwitch helping the Web3 ecosystem at the moment?
Absolutely. So Debangana, good that you started with the word platform because a lot of people perceive companies like CoinDCX, CoinSwitch, and Binance as just exchanges, and they refer to that. But I think exchange only enables buying and selling or exchange of digital assets. But crypto platforms is how we operate in true sense, which enables customer to not just buy or invest in digital assets, but also do beyond that. We are essentially, in crude words, we are also the ecosystem enablers where the journey starts from a customer investing in Bitcoin, Ethereum, and then goes all the way to transacting on blockchains, right? Directly on-chain transaction. And I think the journey from where it was 3 years back to a world where we will see more and more financial products which are going to be powered by blockchain technology and not just mere databases is something that is a big role and contribution the exchanges would contribute most to, because exchanges are the first point of entry for a person who believes in this technology.
Right. Ashish, coming to you, wanted to understand where do you see India right now in terms of its Web3 journey? With concepts like Nandan Nilekani's Finternet pushing for tokenization by, say, next year coming into play, will we see Web3 become an integral part of India's digital public infrastructure going forward?
Amazing question, right? So I would say that India used to be on the exploratory side and started to build on blockchain now, right? It's still very, very early, but we see the signs happening. Let me give you the context, right? India has some of the amazing digital stack that the world has ever seen. We have UPI with trillions of transactions happening, dollar transaction happening on the platforms. We have Aadhaar, OTP-based KYC systems. We have ONDC, and Web3 is the direct next step into this evolution. If anyone, India can build and show the world a model in which a Web3 based ecosystem can scale to hundreds and millions of users and can be used daily, repeatedly, across the globe, across the country, even in the remotest part of it, right? Take an example that today, for a lot of our financial aspects, we depend on banks. Unless you have a bank account or banking access, a lot of rails are not there for you. You can't buy gold, you can't buy anything, you can't be part of the digital revolution. You can't even you're a small company, you can't take loans, for example, right? I believe that with CBDC, with stable coins, with the Web3 infrastructures, with tokenization, RWA, all this access would be one click away for any Indian being in any part of the country. He just need to be connected to the internet. I think that's the vision that India has of digital India. I think Web3 plays a key important role, and a partnership between a public player and a private player needs to go hand in hand. We have seen that UPI has only scaled to this level because companies like PhonePe, Google Pay has participated and innovated on top of UPI and making it like a daily usage for us, right? And I think this is what supposed to happen in Web3 as well. And I'm hopeful in the next 3 years for the India innovation, we probably will not be talking to exchanges here and probably talking to the founders actually building Web3 use cases and which are used daily by millions of users.
Ashish, you made a very interesting point around public-private partnerships. So we'll hold on to that. Sure. I'll just come back to on that point. But Seker, coming to you, you're bringing the global lens here. You are heading Apac business for Binance. How are you seeing the India market evolve as compared to the much regulated global countries in the Apac region, be it Japan, Korea, or the UAE? Where does India stand right now?
Yeah, it's a great question, Debangana. So there is a disconnect here, right? On one hand, you have consumer trends, and you have the dev trends, the developer trends that are well exceeding global trends, right? So you have uptake by consumers of digital assets that, blows the rest of the countries out of the water. And that's across every product segment I mentioned earlier in my presentation. And then you have a developer pool that's anywhere between, depending on the statistics you read, 12 to high 20% of global developer pools for Web3 space. So that is what I call business traction, right? Because that is your demand for goods and your supply in a sense of goods. But then you have the other side of the coin, which is the regulatory traction, where India, I think, lags behind the rest of the world, at least in APAC. It's a choice, and I've made this quite clear. It's a choice that countries make against their national interests, right, and what's important to them. But the undeniable fact is that there is a lag factor here. So other early adopters and jurisdictions that have moved ahead have started regulating this years back. Like Singapore had their PSA, Payment Services Act. Hong Kong had their, initially their anti-money laundering ordinance, and then it became a VATP guidelines 4 or 5 years ago, right? These are mature verticals of the economies now. So there is a disconnect, and I think what I'm looking forward to most is how does that bridge over the next 12 to 18 months? Are we going to hold back the business growth, which is difficult, right? It's like the ship has sailed, right? How do you hold that back? Or are we going to see regulations catch up? Or are we going to see a further gap, right? The delta becoming greater and greater between these two parts of what makes an ecosystem work.
Right. Ashish, coming back to your point, one way of inclusivity that we are seeing right now is how the Reserve Bank of India is piloting CBDC, for example. And it is urging the startup ecosystem to build innovations and use cases on top of that. So although the RBI is wary of crypto in general, but with the Web3 infrastructure and the overall ecosystem play, can we say that maybe public-private partnership is going to be the way forward to boost local Web3 ecosystem?
I think I definitely believe so. I think there are supporters on both sides who want completely public blockchains, no authority controlling anything. I think that's a utopian world in a way. There's people on the other side as well who completely want public blockchain gone away. And only build on private blockchain, which is nothing, it could add benefit, but it doesn't solve like really high scale public auditable problems, right? So I think a mix of those is where I see the real potential happening. And we don't have to look far, right? The idea lies within the growth of UPI, within the growth of Aadhaar, within the growth of ONDC, where government build those rails and then private players innovate on top of it, because they would be helping the end user make sense of it. User at the end of the day does not care it's blockchain or not, right? As long as their use case are getting served and added value from a Web2 ecosystems to a Web3 ecosystem. And I think that's where private players will play a very, very big part. CBDC will give us, programmable money, which I don't know if a lot of people understand how big of the power that unlocks. And building on top of it, maybe on public blockchains as well, where settlement happening on a private blockchain could really unlock the power of money in India. And I'm truly hopeful that in the next 3 years, with Finternet, with finance being tokenized, with programmable tokens, we can really get there.
Right. Sumit, the other big development we are seeing right now is how bigger blockchain players like Polygon and Aptos are partnering with Geo, but those are still very rare occurrences. So when I have to see it from, say, a much smaller scale, local Web3 startup perspective, how do these Web3 startups, become mainstream? What kind of innovations will that need? How do you view this?
Sure. I think, like Ashish also mentioned, I see a lot of these use cases, or like DeFi as a whole, as the backend. The front-end distribution channels should eventually be the same as they are today. You don't need to reinvent new distribution channels or new fintech companies which will again distribute this. You already have the backend solved. You have the front-end, which is these large fintech apps that can sort of solve for user complexity. solve for mobile native experiences, solve for single click experiences, solve for gasless transactions. All of those problems are something that has to be solved, and now we have the technology that can enable that. So over time, I do believe that a lot of more of such partnerships like Polygon and Geo should happen. They are very rare in India, unfortunately, and I think with the right policy, it will give large corporates to also be opened up. Because if I go to a bank in India today to do a partnership, explore a use case, the answer would be no. If I go to a fintech app in India to do some partnership, the answer would be no. Whereas in US, you would have NASDAQ and Polymarket partnering together or investing and doing deeper collaborations. I think that shift should happen and will happen eventually, which is a function of sort of policy. But the larger theme that I see is that more and more current fintech companies will delve into these on-chain financial products, leveraging their own user experience, simplicity, and that is eventually how these two worlds will converge. Internally, we call it like CDFI, which is like CFI and DeFi converging, which is what is going to unlock millions and billions of people to transact on-chain and leverage the real potential.
Sure. And since we're on this topic of the challenges that the sector is facing right now, I think in the morning there was a discussion on how domestic venture capital is still very slow to come in India for the Web3 sector, especially in 2025. But it's the ecosystem players like CoinDCX and CoinSwitch and Aptos who have been funding the Web3 innovations locally. So both of you guys have Web3 venture funds. And could you tell us a bit more about that, the kind of use cases you're seeing, and which one of them have actually stayed and grown over time? How many startups you guys have funded so far in India?
Sure. So I'll take that first. So, like you said, Indian VC still are a bit slow into funding Web3 startups. The reason is uncertainty, right? In India, we have seen, exchanges like CoinSwitch, CoinDCX exist, but there are probably tens of exchanges which were there, which do not exist anymore. So for anyone to be able to have conviction on this space, they need better clarity on regulation, which does not exist. And that is one of the key reasons why Indian VCs have stayed afar, right? And that gap is filled by both of us or multiple such companies which are trying to fund these innovators, because we understand the space very well. We are connected to the regulators. We understand what they are thinking and hopefully how this gonna evolve. So we not only bring money to these innovators, we also bring a ton of experiences, ton of guidance that they would otherwise not get by directly raising from a VC in India, right? And that's the value add that we provide. I think I can talk about few use cases like today searching anything on blockchain is very hard. So we have funded companies who are building Google for the blockchain ecosystems. We have funded companies which have done influencer management or tokenization and for influencers on their platform, so that users can show their love, appreciations to those influencers, right? So I think that space is growing. We have already invested in over 25 plus companies so far in the last 2 years, and will continue to invest more. The idea of the initial fund was to invest about 250K per check. It has now gone up to 2.5 million per check, so which shows that our commitment to the cause and making sure that crypto blockchain companies actually do innovation in India rather than going outside and building outside.
Wow, that's a big green shoot there for startup funding. Sumit, you wanted to add?
Yeah. My response to that is less of a financial one, but more of an emotional one. When we started in 2018, we found it very, very hard to raise 1 crore of seed capital. And I'm talking about only 1 crore. And we had to slash our valuation down to very, very low numbers, something that abhi wo pre-seed round hota utna, right? That was our valuation in 2018, and that was a real struggle that we have seen ourselves firsthand. It took us a lot of time. We were like sort of almost out of capital, and I know that there are hundreds and thousands of students, entrepreneurs who are trying to raise capital, but because of the problems like VCs don't understand the category, the long-term patient capital is not there in India by Indian VCs, and if someone international is there, then they will ask the companies to set up their base outside, which does not add to the Indian Web3 ecosystem. It's like the value goes offshore, the ecosystem equity goes offshore, and that's not environment that we want to sort of build in. So the idea was to sort of change that whenever we got capital that gave us the flexibility to invest and support young startups. So we have started that journey around 4 years back, invested almost in 20 companies so far. Some of them have scaled to, even beyond $500 million. We came in like early on in seed series A kind of a stage. The typical check size is 100K to 500K, and that goes all the way to even full M&A that we did of BitOasis last year, 1.5 years back. So we did a small investment, double-digit million, and then did the full acquisition of the company. So we have looked at different kind of deals. Stan, one of our portfolio company, recently raised their Series A. Web3 gaming is something that we've been investing heavily on. So we pick categories, and most importantly, we pick founders who we believe are going to be there for 5-10 years, and not just like riding a wave, riding a narrative, only there for the token. So those are some of the red flags and green flags that we have assessment on, and then basis that we decide how much we want to support that company or back. That's the thought
I just
process.
want to add one point to Sumit's last point. Actually, we have seen more investment happening in bear market than bull market, because we have seen people, in a bull market riding the wave, and the thesis doesn't hold up. So we actually invest more in a bear market, end up investing more in a bear market.
Buy low, sell high.
Yeah.
Right. Seker, Binance's approach to supporting the ecosystem, at least in India, has been more from a perspective of advocating for education, educating the masses on how to go about investing in crypto, how to build. Tell us a bit more about the work that Binance is doing on ground here to build the ecosystem and to support innovation.
Yeah, absolutely. So first, hats off to these founders, gentlemen on stage. I think a huge part of why in any sizable market the industry gets to this level of maturity, especially in fighting against the grain, is because founders stick with it, right? So as an executive for a global business, what I can say is our contribution to the market is different. Our experience has been that globally, whether it's frauds or scams or lost coins, usually all of these things happen, and they happen at scale because of a lack of understanding of what you're dealing with, right? So there are usually two layers to any architecture. There is the infrastructure layer, and then there is the financial layer on top. Crypto is no different. So in the traditional space, stock brokerages and banking, the infrastructure segment is taken care of for you, right? But in the blockchain and crypto space, you need to have a certain level of understanding of what the infrastructure layer is before you start participating in the financial layer. Otherwise, you're setting yourself up for incidents and issues. And so a lot of our effort has gone into Binance Academy, which is a non-profit, free-for-all Web3 content database. We have 60 million users globally, and of course, Indian users are a part of that. And we run, thousands of programs on it. So we have modularized programs, which basically gives you a crash course over 30 different modules in 10 different languages to give you a all-round understanding of what blockchain is. We also have individual pieces. It could be, editorials, it could be videos, it could be podcasts. And so this is a very rich content base that we've created over the last 8 years, which we make available to users around the world. And we actually get involved with the youth layer as well. So we've run programs for about 225 universities around the world, so everything from students to fund managers, right? And we basically walk them through, depending on their level of sophistication, and how this actually works as an ecosystem. What the portfolio management theory could be if you included crypto or digital assets as a part of your personal portfolio or a corporate treasury portfolio. So we believe that so we have 300 million users around the world, right? The first 100 million users came in the first 5 years. The next 100 million users came in the next 2 years, and the final 100 million users came in the last 1 year. But the next 1 billion users are not going to be your traders. They're not going to be your OGs, right? They're not going to be your fanatics. They're going to be your regular people who want to see use cases. To Ashish's point earlier, right. It's a combination of education, but also creating products that bring value, simplicity, convenience, and safety, right, for the everyday user. So right. It's a combination of these things that we're working on. So we're bringing product density, education, and hopefully stability and security to the market as well.
Right. I had an open question, whoever wants to pick this. India, going by hashed emergence number from last year, India accounts for nearly 17% of the new developers that are entering into the Web3 sector globally. Indian developers are building maximum number of applications on the biggest blockchain networks in the world. Yet we say that India is still at a nascent stage in its Web3 journey. So where are the real world use cases? Where are they being built? What's the ground reality?
You want to take? It's okay. I'll take that. So I think why we say nascent is because while the developer activity is very high, they are not building infrastructure layer in India or from India, right? What I meant by that is that, say, a global blockchain player would hire them as developers, but India has always done that already. When AWS, Amazon, Microsoft, so we've always been on the service side, right? All the infrastructures have always been built by the West. The idea, when I say that the innovation has to happen in India, is that with the talent that we have now, can Indian founders from India build those massive platforms which the world uses? So the value accrue to India rather than value accruing outside. So while this is very true that the developer ecosystem is very big, growing, and a lot of chains like Aptos, like Sui, like many others, are helping even train these developers in India to be able to work with them. But ultimately, we would want, and we are selfish, we would want people to build from India, in India, and to be able to build for the world. Not just being a workforce for the outside ecosystem, but actually build innovation from India.
Right.
I think I have a slight disconnect in terms of India is not actually pretty nascent when it comes to adoption. If you look at the stats, whether it is in terms of number of consumers or in terms of number of developers, India stacks right at the very top, number one in terms of consumers. Again, there are like you look at number of users and exchanges, but you also extend it to how many people are actually using wallets. So for Trust Wallet or for MetaMask, India is also one of the large user base. So if you look at the adoption, and that is the reason why India is like number one when it comes to on-ground adoption, right? And those are some of the numbers that doesn't surprise me, and that is the adoption that we have seen on the user front. Even on the developer front, I think India is going to be number one globally. I think the challenge is that we are right now importing solutions and exporting developers, right, with the current policy environment, whereas it should be the other way around. And that's why we don't see more and more stuff getting built in India, because folks like Sandeep, Polygon, a lot of founders are there who have built massive success stories. They are unfortunately not building from India anymore, right? And whereas for us, it's the core market, and we want to sort of be building here. And that is the reason why we don't see a lot of the conversations around, so many people building in India, because they simply go offshore. The talent goes offshore, and that is the problem. But in terms of actual stats, I think India is pretty ahead. And for every new technology adoption lifecycle, we are currently at what? 650 million investors, which is roughly 8% of world's population. It's not bad. And that too, when we are seeing regulatory clarity emerging, right? When we extrapolate for another 3 to 5 years, I think we'll see a very different picture where more than 1 billion people will essentially come on chain, will start using, and this will become mainstream. Right now, it's very crypto native and crypto OGs and whales, all sorts of words, are there. But I think it should become mainstream, because at the end of the day, the customer essentially cares for value, and these value will come to customers, and Indians are using it, right, directly, indirectly. It's basically certain laws or taxes which essentially pushing this offshore.
And how important I have actually two questions here. How important does regulations become in a scenario like this to push Web3 ecosystems growth in India? And also because, like you mentioned, most of these startups are going to Dubai and Singapore, and that's where they're building their use cases. Secondly, with the recent market crash that we saw in October and November, will this have an impact on the regulatory discussions in India as well right now? And where are we stuck in terms of regulations, honestly, since you guys are also a part of Bharat Web3 ecosystem?
Yes.
Where are we right now in the journey?
So I think the question comes down to how big of the industry it is, right? I was talking to Seker backstage that for government to care and to get regulations early, this industry need to be much, much bigger. Today, we are seeing exchanges, volumes, and that's the metric we talk about. Number of users, MAU, DAU. But I think we need to start talking about how users' life is changing using these ecosystems. How is blockchain ecosystem or a blockchain-based service is impacting the user and making his life better? And once that number is big enough, the industry would be big enough for regulations to happen. Otherwise, it will always be the dilemma whether innovation should move first or regulator should move first. While we continue to push for regulation time and again, at least clarity on classification of crypto, exchange regulation, so at the end users are protected. But to regulate the entire sector, I think it needs to impact more users and more deeply. More use cases need to come out which solves their daily problems, like say UPI has done or say ONDC has done and many others, right? So I'm still waiting for that to happen, but hopefully regulation will come, but this will just expedite the regulation much faster.
Right. Seker, Binance has seen this journeys play out in pretty much most of the global markets by now. So according to you, where does India stand in terms of its maturity curve at the moment, if you had to compare with the global journeys of other markets that Binance has experienced over the years?
Okay, so we are regulated in 22 different markets around the world, right? And so we've done this we've repeated this exercise before. So I can tell you the secret ingredients that goes towards adoption locally. Because we've been talking about how do you build an ecosystem locally, right? How do you have local innovation? How do you have center of gravity locally rather than supporting remotely a business that's overseas? Think about it for a second, right? Whenever I'm confronted with a problem like this, I go back to first principles, right? What are the things that goes towards building a business or an economy? It's technology, capital, and labor, right? Your factor inputs. Now, of these three, capital will flow to where it's most well received, right? Technology is borderless. And so labor tends to be the sticking point. But we live in a brave new world where capital flows to Dubai overnight when they come up with a VARA-based regulatory framework. It goes to Hong Kong when it opens up to VATP exchanges and brokerages. It goes to Singapore when the Payment Services Act is published. So wherever there's a warm welcome and the red carpet for crypto businesses, capital will flow. And with it, technology will go, right? And then you had this problem where labor was stuck in the past, right? But you have a country where contributes about 25 to 30% of global GitHub repositories, global developer pools. But these guys don't have to travel to work anymore. They can work remotely. So that's the problem, right? Now, if I gave you this scenario, if I took Singapore's crypto licensing or digital asset licensing framework, if I gave you Hong Kong's framework, I lifted it up and I dropped it on India, right? And it started to apply tomorrow. What do you think would happen? The obvious would happen, which is that capital would flow back in. You'd have a thriving economy and a thriving subsector, and then developers would work for companies that are housed locally. So in my mind, there comes an inflection point when business is starting to take off. I talked about the disconnect, the delta earlier, right? You've got business taking off, you've got consumer trends taking off, you've got the talent pool taking off. What you need is basically macro policies that says, we want this space to grow and thrive in India, right? So that, I'm talking about political will and regulatory frameworks here. When that shifts, the obvious happens, where we're not having this discussion anymore about how we bring the center of gravity back. We're having the next phase of discussions about, well, the center of gravity is back. What are we building tomorrow?
Right.
Right.
Right. And since we have all the exchanges here on one platform, I definitely have to ask you this question. What do you think of the current crash that we saw in the last couple of months, given all the build-up and the positive developments that happened throughout 2025, be it ETF, policy, so many other things? What do you think of the current crash that happened? Was this expected? Is this here to stay, this bearish market that we are seeing right now?
I don't think it was expected. Like I mentioned, this cycle is playing out differently. I've shared this previously as well, a few months back, because the nature of market participants is different. So this can play out. Normally, we see November as the peak, and then December starts to slow down, and then January, February, March onwards sort of slows down the year after the halving cycle. But this time, because the market has corrected, I am expecting that the market next year will follow differently than the previous cycles. November has been an outlier. So yes, it was not expected to see so much correction, but yeah, I mean, there's so much happening in the US and tweets coming from President Trump, which essentially shakes the market up. But next year, I do believe that because of the kind of new players that are entering the market, I see a lot more patient capital, and the market dynamics will change from purely retail, which are more emotional, to more sort of savvy long-term investors. So we'll see stronger support levels. But overall next year, I'll say that we will not see a range. And again, no price sort of advice, but I am relatively more bullish than most of the other people for 2026.
Right. Quickly, like we are just running out of time, if you guys would want to add your perspective.
I think risky assets always take the hit when liquidity gets crunched. We are seeing with Japanese interest rate going higher, free money is getting over, liquidity is getting crunched, and with Fed uncertainty on rate cut, risky assets are the first one to hit. Doesn't mean that it will probably stay there. With the right policies, with the right infusion, it will continue to grow. As long as the on-chain activity does not get impacted, I'm not too worried, right? Price will be someday up, someday down, but as long as people continue to build good use case, this technology is here to stay and will continue to rise along the time.
Seker, would you want to add?
In conclusion, I'd say, look, the invisible hand guides all markets, right? There is no one in this room or outside of this room that can say this is the exact factor that caused this price crash, right? It's macro shock, it's external shocks, it's consumer sentiment, it is irrationality, it is demand supply mismatch. Whole host of things can make a market move up or down. That's not the issue. The issue is what's your margin of safety, right? That's why education we feel is critical, because people have to understand that they're dealing with an asset class where fundamental analysis is impossible. Maybe some element of technical analysis is possible, right? But you need to then have the adequate margin of safety. You need to know which products are suitable for you based on your background, your learning, your knowledge, your skill, your financial position, right? So education is going to be key for people to understand where they stand in the understanding of what they're dealing with, build themselves the adequate margin of safety, and then hopefully take positions that match that sort of their context and their situation.
Sure. I think we are already running out of time. So thank you so much for the discussion and the amazing insights that you guys have shared. I'm sure it's going to be helpful for a lot of the Web3 startups and builders sitting out here. Look forward to a more exciting 2026 for the crypto and blockchain ecosystem as we enter the year. Thank you so much for your time.
Thank you.